Have you ever done a dental lab before?
I haven't, but when you're dealing with professional services like that, I've done a lot with different types of professional services. And so when you're dealing with a professional service like that, your best buyer is going to be another dental lab that wants to expand through acquisition. And, they may be in a different region, a different area. And so they'll get a local footprint, or they may want to just roll in those dentists and that book of business into their existing facility, so they can eliminate a lot of the overhead and a lot of the expenses and really increase the profit margin on that business.
Right. That's exactly what I was thinking. That was really the only value, because in the conversation I had with her, that's actually the wife of the husband that runs it. They're beat up and tired. They're just, exhausted. And in the last conversation I had with her about a month ago, I think she was discouraged with my conversation when I didn't know how much it was worth, but it certainly didn't come up to what she thought it was worth. I didn't state an amount. But now a month later, she's gotten a hold of me again. And that was a kind of a lesson to me that you don't want to chase these things too much. You want to be honest, and you want to make sure that you develop a relationship with whoever it is.
Yeah.
Because they may call you back, right? But now I've asked for the tax returns and financial statements. I did send us a course of what I think is a good practice, an NDA, non-disclosure. And I said, well, you don't have to sign it. I said, it really applies to me. I'm not going to disclose. One thing I had a question about on that, Tanya, if I send an NDA out that says I won't disclose it, I should have some verbiage on there probably that I can disclose it to a prospective buyer, right?
No, basically what you're saying. So it depends on how your NDA is written, but the way that it should be written is that you're saying that you will not disclose the information that is provided to you, that is being provided to you solely for the purpose of evaluating whether or not the the business is saleable and at what price and so forth, and that you will not disclose anything until such time as the seller allows you to in writing by way of an engagement agreement. And so that way, your listing agreement or your engagement, or you can even put that this non-disclosure terminates on a given date, on the first of a given date, or the signing of an engagement agreement. So
okay, I got you.
Yeah.
You call it an engagement agreement
or listing agreement or representation agreement. I mean, they're all the same.
All the same, right?
Yep. 3 names for the same thing.
Exactly. The English language. So they'll have equipment, furniture, fixtures, and equipment, right? They'll have the FF&E, and I won't throw that acronym on her because like us, we don't all of us know what acronyms mean. She didn't know what a financial statement was, actually. So when I said I need a financial statement, she says, what's that? And that was concerning. Yeah. So I did ask for like I was going to say, the last 3 years of tax returns. And given that she has those, and she said that she could get a hold of her accountant, which was helpful to know that she has an accountant.
Yeah.
And so anyway, that's the process I'm in. And then I guess at such point, when we find out what the gross sales are, we can start calculating, right?
Yeah.
Is that what you would do?
Yeah, I mean, I would start with on the tax returns. Basically, you're wanting to look at, the revenue, the cost of goods, the total expenses. You start with that taxable income number, and then what you want to do is add back any discretionary expenses. So discretionary meaning discretionary to the seller where it's not necessary for the successful operation of the business. So that's going to be things like, the owner's vehicle. If it's not a delivery vehicle and it's just for their personal use, but they're expensing it through the business, you can add it back. Fuel, meals and entertainment, travel expense, stuff like that, that is discretionary, that, again, is not required for the operation of the business. And then also any one-time expenses. So if they relocated the lab and they had, say it cost them $15,000, $20,000 to move the lab from one place, one business premise to another in a given year, then you would add that back because that was a one-time expense. What you're really trying to do is normalize the financials to get to your operating income and operating expenses. So anything that is not operating income, let's say they sold a piece of equipment that they were going to replace it, and they sold a piece of equipment. Well, that's not operating income because that's not the business they're in. So you would exclude that income and adjust it out. And the same thing with any expenses that they're paying that are not ordinary operating expenses.
That's very good information. How about if the salary they're pulling out, I know you don't take it out because they have to make a salary. Someone does, I guess, because that person's actually physically working in the lab. So that's a production person. But what if they're, let's say, a typical person you could hire would be $18 an hour, 20, whatever. And they're pulling out, $50 an hour.
Well, the bigger problem that you have there is if it's husband and wife that own it. Oftentimes what I've seen in small medical practices and small, other types of professional firms is you have a husband and wife working there, but only one is being, like, the wife is not being paid and she's the key office manager. So when you're calculating seller's discretionary earnings, you add back the salary of one owner. If there's multiple owners, you add back the salary of one owner. But in a situation where you have somebody like a spouse who is working in the business but not being paid for it, that's a negative adjustment. Now you have to make sure that you adjust that for a new owner coming in, they're going to have to pay somebody to do whatever it is that person is doing, whether it's an office manager or bookkeeping, whatever it is. That's going to be an expense and it's not reflected on the financials currently. So you have to put that in as an expense.
That's a really good point. And another thing that she brought up, I don't think she meant to tell me this, but she was basically saying that the 30 dentists that they serve, she had created those relationships. And she's the salesperson. So she's the one, they probably don't even know him, they've never met him. And she's probably the front to the business. And she has another job. She doesn't even work there. So, I mean, these are not quantifiable in a sense, but they are problems. They're problematic.
Yeah, she's going to have to be available to transfer the relationship.
That's exactly right.
Yeah.
I don't know if there's any inventory. There might be some inventory and equipment, I'm guessing. But so.
Is he the lab technician?
He is. He's the one that works there. He's burned out, according to her.
Do they have any other employees?
I think there are 3 other employees. I think maybe they have a delivery, part-time delivery. I'd have to look at my notes. But there's, I think, 2 or 3 technicians. I don't know anything about full-time or part-time. I'm just starting on this process. So
yeah. Okay.
That's,
okay. Sorry, Dick.
I'm sorry. Yeah, John, that's pretty much it. I mean, we're working on a restaurant, 2 restaurants. We got this lab. We've got a healthcare, urgent care. We're waiting for evaluation on. I do have a question, John, before you comment, for everyone here. There seems to be some strong feelings. Tanya has your way of doing things. I notice you say you don't do outside. Well, I don't know what you do exactly, but I kind of heard you say that you do your own internal valuations of businesses mostly.
Yeah.
And I was thinking, wow, it'd be great to have a third party valuation every time, but I've kind of backed off of that because I'm thinking it's not a very good idea. I don't know. Because I need to build the program or the package anyway, right? And there are ways or very helpful tools out there to do valuations. So in fact, this video that I'm going to suggest everyone watch that I'm going to send the link to, he talks about that very thing. And he talks about his package, which I think is really phenomenal. He's very open, by the way, with all his data, all of his forms, all of his vendors, all of these things. He's been in the business for 30 years. And so I think, anyway, if you don't listen to anything else, you ought to listen to this one video that he did yesterday. It was just a training session that he did yesterday. And then he'll give you a list of places you can go for more of that training. He's written a book too. Anyway,
Nice.
whether you like Glenn or not, his style or not, he's got good information. It's quite good, I thought. Anyway.
Great. Yeah, put it in the chat for everyone. Thank you.
So if